Similar story with Marriott. These companies are doing just fine because there's so much pent-up demand. Is this all pent-up demand?
It is, and I think all the metrics look really good, except for the room nights. So they actually missed on room night. I mean, when you look at, bookings, revenue, everything.
What does that mean, room night?
Room nights booked is actually the number of units that were booked, considers their overall supply, how many times the rooms were booked. So this is like the base level unit. And they talked about, consumers using Airbnb more and more for longer duration stays. That's a nice tailwind. That's reflected in their ADRs. But the aggregate unit growth is actually slowing down. So that is the only negative I see in the print. I mean, look, this is a great business model. They have, the best EBITDA margins out of all the marketplace businesses. So there's plenty to like about Airbnb. But when you look at the overall demand, I think that sort of hints to a deceleration.
Well, give us a sense here of sort of what the market can live with. And I guess more importantly, the valuation, because you talk about the growth rate. We're talking, for one point, this is like 50, 60, 70% growth rates. I was looking at the analyst forecast through 2023. They're kind of in the very low double digits, like 10, 11, 12%.
Well, so clearly, I think you are at a point where the comps get tougher and tougher.
Yeah.
And there is still a lot of uncertainty because revenue to me is a kind of a lagging indicator. Bookings is more of a leading indicator. And what bookings is suggesting is also in line with, the room night trend that I talked about, that maybe ADRs are going down because they did very well domestically in the US.
Gotcha.
But now with international coming up, the ADRs will temper down.
But what about the pricing? We were talking about Marriott earlier in the program, and the idea that their quarterly numbers were helped by the fact that room rates, average daily rate is up by, it was in the double digits, I think 13, 14% or something here. Are we seeing something similar happen with Airbnb? And my second part of that question, is that sustainable?
So it did happen for Airbnb over the last 3 or 4 quarters because people were not using hotels, they were using alternative accommodations, and that did drive up the prices. The problem for Airbnb is because the hotel inventory is coming back, not every traveler is going to prefer alternative accommodations, and they're still somewhat niche category, although they have been one of the pandemic winners in terms of expanding their addressable market. But I still think it's kind of lower than the overall hotel addressable market.
So if they had to look for growth somewhere, where would it be? What's their lever that they can pull?
International. This was a company that has 60% revenue exposure internationally. Now it's more kind of slightly in favor of domestic because of what happened during the pandemic. But that is where you will see pent-up demand, and that could actually be the next lever of growth.